All right, guys, man. Profit Gang, you all know what it is. And yeah, man, welcome to a brand new video. And in this video, I just wanted to, for the beginners, give you guys like a glimpse of what to expect when it comes to, technical analysis and actually trading the foreign exchange market. Now, for the people who have experience, for the people who maybe have seen some of my videos in the past, this is going to be like another refreshing masterclass videos. As we go into a trade breakdown here. So without wasting any time, I just want to go into the trade breakdown. Now, the way I trade, my strategy is based on smart money concepts. And a key thing, a key takeaway from smart money concept that I tend to adopt is the idea of market structure. So before we even get into, the charts or anything, I just want to show you guys my trading plan, what I'm actually working with. And we're going to develop this trading plan sometime during the free course. Okay, we're going to develop the trading plan all the way from scratch sometime during the free course. So before we even get into breaking down the markets, I just want to show you guys the plan that I'm actually working with. Okay, so on my other screen here, I'm just going to drag the trading plan over to this screen. So just give me a minute. Then yeah. All right, so this is going to be the trading plan that we're going to be creating again from scratch during the free course, right? So the trading plan is basically divided into three parts: part A, part B, and of course part C, right? With part A being the analysis part, and of course part B is your lower time frame confirmation and execution, and part C is the trade management. Now, when it comes to the trade management, this is very, very subjective, right? Depending on the type of trader that you are. If you're a day trader, if you are a swing trader, if you're a position trader, this is very, very subjective. But what I've done here is I've put in, the lowest possible risk to reward that you can actually look for in the market and still be profitable after even a series of losses. So let's say, for example, you take 10 trades and you're only profitable on 3 trades. That's going to leave you with 9% with a average risk to reward of 1:3, right? So if every of your win is giving you back 3%, one trade is going to be +3, 2 trades +6, 3 trades +9, where 7 trades is going to be -7. So at the end of the day, you're still profitable. But anyways, you can still decide to hold your trade to, let's say, to break a high or a low, or you can decide to hold your trade to the next key structure point and or next demand or supply level. But this is basically the trading plan that I'm working with. And the first part of the trading plan, obviously, you can see the very first thing there is to do top-down approach. Okay, so when it comes to your higher time frames, 4 hour is a higher time frame, daily is a higher time frame, the weekly is also a higher time frame. Now, your higher time frame might be very, very much subjective too as well, depending on where you start your analysis. So some people start their analysis on the daily time frame, some other people start from the weekly, some other people start from the 4 hours. These are all higher time frames. As long as you understand how all of the time frames come together and work hand in hand at the end of the day, you really don't have a problem. But you're basically supposed to start your analysis from a reasonably higher time frame and work your way lower to the lower time frames, right? So you can see on my trading plan, it says top-down analysis, weekly, daily approach. Sometimes it's not all weekly and daily approach. Sometimes I just start from the 4 hours. Like today, I just started from the 4 hours and I just followed the market from where I've been tracking the market for weeks now. I've been looking at one pair only, Euro USD. So I've really been in the skin of Euro USD, so I know exactly where the market is. So today, it wasn't necessary for me to go back to the daily time frame to start my analysis on the daily time frame. I could just follow the 4 hour, order flow and things of that nature. So you want to, on the higher time frame now, determine the trend of the market, okay, whether or not the market is bullish or bearish. Once you determine the trend, you now want to start to get your key structural levels on the higher time frame, okay? which is this here. So you want to determine the trend. You want to determine the structure of the trend. Okay, not to jump that, not to skip that. You want to also determine the structure of the trend, and you want to also determine whether that structure has, internal and external structure. So you want to know all your key structure points. You want to know all your key structure levels, and you want to mark out your zones, both the internal zones and the external zones. So the external zones basically are tied to the external structure. The internal zones are tied to the internal structure, right? And then you now want to start to refine these zones until you get to a reasonably low time frame where you can either just take your trade or you can wait for confirmation on that time frame. So let's jump into the charts right now. Having looked at the trading plan, having seen the trading plan and how it's designed and everything, let's jump into the charts right now and let's break down what happened right here today. So for us to even begin, let's go back to the daily time frame, right? Let's go back to the daily time frame. So now here on the daily time frame, what we can see is, just to give you guys a macro perspective of what's going on here. So what you can see here is a massive downtrend, just looking at these highs here, right? And I'll just be quick with this a little bit. For these, I need a tool. I need the brush tool. Okay, I need the brush tool, right? So let me go back to full screen. And yeah, so based on every single thing we can see on the screen right now, obviously, if I move the screen this way, we can start to see some other things, right? But just looking at the trend, we have been in a massive downtrend for a very long time, right? On a macro view, right? But I'm just gonna have to start from somewhere, and I just choose to start from here, right? So looking at what we have here, this is that's a high point right there. We have this low point here. The market pulled back to this point, and from this point, we have this point here. So what we're seeing is a massive downtrend from this all the way down to this. We had a pullback all the way back up, and now we have had a massive break of structure to the downside. Now, this is what I mean by you need to identify your external structure and your internal structure, right? Now, based on what I'm looking at here, what I've just marked out is the external structure, right? Now, since this leg here is the most recent leg of the market, so what I'm going to do here is, let me just draw this. I'll go back to this. Change the color of this here to blue. And then delete that. So if I pick this again, now what I'm looking at here is the most recent leg of the market right now. Now, the most recent leg, based on the trend that we are in, is from this high here to this low here. And please don't be confused, right? To this low here. This is the most recent leg, right? This was one impulse leg, and that was a pullback. This is the most recent impulse leg, right? And that's what I'm shifting my focus now to. Now, within the most recent impulse leg, you can see another, structure in there, right? Talking about push to this level here. The market pulled back again, failing to go higher, breaking that high, and then it pulled all the way back down here. So this is the internal structure within the most recent leg. Now, I'm going to treat this leg now as a new leg, okay? I'm going to treat the leg from here now as a new leg, although I know I'm within internal structure. So I'm going to treat the leg from here all the way down there as a new leg, right? So now what I'm concerned with is this high here. Okay. This high is here all the way to this low here, right? That's now my new area of concern. Now, again, if you zoom into that one leg, of course, you can see another set of internal structure. So this is what we mean by when you're on the higher time frame, you need to mark out your internal structure, external structure, know exactly what leg you are in the market. So basically, what we're looking at here is the market has actually pulled back to a particular level from here, okay? the market pulled back to a particular level from here. And then from here, it pulled back down here. Okay, so now I'm looking at the leg from here, from this low here to this leg here as now a new leg, right? As now a new leg. Now, within this leg, okay, you can see that this leg was actually an uptrend, but at some point it became a downtrend, right? That leg there was actually an uptrend, but at some point it became a downtrend. If I zoom in a little bit further, you can see what happened there. So the market went up and then it came down. Now, just to give you a quick recap of what a reversal is. Okay, what is a reversal? A reversal is simply when a market is trending to the upward direction, for example, and then something like this happens. So we're breaking market structure to the upside. And at some point, the market creates a high and then fails to create a higher low. So normally in an uptrend, you're expecting the market to give you something like this to create a new high. But something happens whereby the market now breaks this low here and then pulls back here, failing to go higher, and now starts to continue to the downside. Starts to continue to the downside as so. So what we can say here is that a reversal, has happened somewhere around here, right? Because if you notice, we were taking our structure to the upside. So let me just draw lines there. So we're taking our structure to the upside, taking our structure to the upside. But at some point, the market created a new high, and instead of giving us a higher low for another higher high to be created, it now took our structure to the downside and, consecutively started taking our structure to the downside. So this is the point of reversal, whereby the market, changed the direction of the flow of money. And now sellers started getting into this market somewhere around here. Okay. So now if you look at what has happened here, keeping in mind that we have internal structure within the leg from here all the way there. Now, if we mark out that particular internal structure, we can now observe that there was a reversal, somewhere. So if we start to mark our structure here, we can say that's a low there. This is kind of like a high. This was a low. I know that area there is a little bit messy, but I'm sure you can see in terms of structure what's going on there. So I'm just going to skip some of these internal levels of structure. I'm not going to mark all of these levels. So that there. So we have this high. So again, all of this is internal to the leg from here to here, right? So we have this high, we have this low. There's a break of structure there. Okay, break of this high. We have this as a high. We had this as a low. We had this as a high. And this is now the point of reversal. This is where the shift occurred. This is where structure shifted to the downside, right? I'm going to make the color of this red so it can stand out. So that's the internal structure right there. That's the internal structure. And that's the point of reversal right here. Okay. This was actually the point of reversal. Okay. So that was where the market reversed. I'm going to make this a little bit thicker here so we can see. All right, so that is the point of reversal. Now, just like we said, since the market has now reversed to the downside, okay, we can now expect there to be another pullback into some certain levels for another, continuation to the downside. So that's exactly what happened. You can see now, following price, you can see now the market pushed up from this low here, after the reversal from this low to this high here. Now, if we take this leg as one leg of price, so looking at this as one leg of price from here all the way to the top there, that's one leg of price. Looking at that as one leg of price and zooming into that leg, once again, we can see that, there has been another internal reversal, okay? Another internal reversal. So this is me basically doing detailed top-down analysis, right? So if you start to pick market structure from here, you can see high, low, right? You can see another high, another low. You can see there's a high here, there's a low here, right? All the way to this high here, all the way to this low here. The market shoots up all the way into this zone. And then what happens? It takes our structure to the downside. Now I'm looking at this leg as one leg of price from here all the way down to here. This is where my concern is right now, because there has been a break of structure internally here. Now remember, following the higher time frame narrative, we are actually bearish on these markets, right? Following the higher time frame narrative, we are bearish, right? Now that we see the market reversing, giving us bullish pullback and bearish confirmation back to the downside, we know that we are in line with the with the macro trend, right? We are in line with the macro trend. So going back to exactly where we are in the market right now, like I said, we are now looking at where's the leg we're looking at? We're now looking at the leg from this to this here as one leg, right? As one leg. So that low there to this high here. So this is the leg we are now concerned with. Now, if this is what the leg is looking like from this low here to this high here, and we tend to zoom into that leg, obviously, again, we can see internal structure of this leg. And we can see there's been another internal reversal on that particular leg. So from here, there was a low, we had a high here, we had a low here, and then we had a high here. Now we have taken out this to the downside, right? Now we have break of structure here to the downside, which is another reversal of that price leg. So now the price leg we're concerned with, since we know we're bearish in the market, we're looking at now the leg from this to this. So I'm just going to grab this. This is the leg we are now concerned with, right? And of course, we have had the market pull back into certain areas. So if this is the leg we're concerned with from this high to this low here, again, you can see internal structure within that leg, okay? And then we have had internal zones come from those internal structure levels. So we have had this low, we've had this high, we had this low here. This level here has been mitigated. For the people who have experience, of course, you know what mitigation means. For the beginners, I'm sorry, but we're going to have to bring you up to speed in the free program, okay? So this order block here, or this supply level here, has been mitigated and we push to the downside, right? Again, we pulled back into this supply level here. So this candle here has been mitigated again, and we have pushed again to the downside. So how did the trade I'm about to break down came to be, right? Knowing all of this and breaking down the market from all of these, okay, from all of these to exactly where we are now, I've simply derived my bias, and my bias for this market is to sell the market, right? My bias is just to sell the market. Now, the order flow I'm going to be following is the most recent order flow, talking about this area here, right? I know the chart is looking a little bit messy, but please try to pay attention, right? So the order flow I'm following is this here. Now, looking at this, I'm now not just looking at because all of this has happened already. So I'm going to adjust my low from this all the way down to this low here. Now, if this is all that I'm looking out for, right, I know there's been a break of structure here. So I know the demand level here has turned into a breaker level. Now, for the people who don't have experience, obviously you don't know what a breaker level is. But for the people who understand what breaker levels are, let me just reiterate what breaker levels are. So you guys can get a view of what I was looking at exactly around that area. So to explain what a breaker level is, let's imagine we are in a downtrend. Imagine we're in a downtrend, and of course, we have demand levels in a downtrend. Now, in a downtrend, there's a possibility of the market never creating a lower low, right? In a downtrend, you're expecting the market to create a lower low like this, but there's a possibility that the market never creates that lower low, right? There's a possibility that the market can just do something like this, come to something like this area here, and then react and then go back to the upside. Now, if this second scenario actually happens in the market, we can assume that the market reacted to some demand levels around here, okay? We can assume that the market reacted to some kind of demand level around there that caused it to now push to the upside. But if this scenario fails, it means we're going to have something like this. Now, when we have something like this, the previous demand that was actually there now turns into a supply level, which in turn turns into a breaker level. And of course, is actually a supply level that we can now, take a trade from, right? So in this scenario, that demand level has turned into a supply level, right? So once a demand level is broken, that particular demand level turns into a resistance level. Now, instead of us to say, well, that's a demand level that has turned into a resistance level, we can simply say that's a breaker level. Now, what type of breaker level is it? We can say is a bearish breaker because the market is breaking structure to the downside. So we have a bearish breaker level here as, a type of possibility. The market can come back to the breaker level, and this is where the idea of break and retest came to be, right? So the market breaks this, it can come back to retest this and continue to drop, right? This is one scenario that can play out in this market right now. Another scenario that can play out is the market pulling back all the way to, this level here and then dropping to the downside. So the market can decide to invalidate the breaker level and come to the supply level and then go to the downside. But in terms of what possibilities can play out in this market, this is one possibility, and this is another possibility, okay? This is another possibility, right? The market can as well come here and also push to the downside. So these are two possibilities that exist in this particular market. Now, taking this concept to the live market right now, and looking at what we have here, taking into consideration that we have this as a high, we have this as a low, we have this here as a high, and we have taken out this low here, right? So the area of demand that has been broken and turned into supply is this whole area here, right? This whole area here. And that area is called your breaker level. Now, of course, I'm going to teach you guys how to create customized templates from your tools, but that whole area there is a breaker area. Now, I would have really loved to see the market pull back into this area before taking that sell, but there are other reasons why that sell was actually valid. Okay, now this is all the analysis we have done on the daily time frame. Remember what we said on the trading plan? Okay, top-down analysis, weekly or daily, determine the trend, bullish or bearish, determine the external structure and internal structure of the market, mark out higher time frame demand and supply zones, then start to refine these levels, start to refine these areas. So now we have done everything except for the refinement of these areas, okay? Now, in terms of refining these areas, it's as simple as having identified these areas already, is as simple as just going to the lower time frame and looking within these same areas. Now, in terms of possibilities for this market, what's possible in this market? It's possible for this market to, just like it did, pull back to the breaker area here and sell. Okay, it's also possible by for this market to now, using the internal structure of the market, now pull back to an area such as this and sell, right? Because this is the closest supply level. After this area here is one supply level, this area there is one supply level. So in terms of the possibilities for sales, those were the possibilities, right? We're waiting for the market to pull back into the breaker level, right? Pull back into the breaker level and sell from the breaker level. So that was the bias, that was the idea, that was the plan, right? So now dropping to lower time frames, from the daily time frame, we can drop to the 4-hour time frame. Dropping to lower time frames, we can now start to see some other things. So obviously on the 4-hour time frames, within the breaker level on the daily time frame, we can see some type of internal structure on the 4-hour time frame. So looking at the internal structure on the 4-hour time frame here, we have this, say from this high here, we had this low here, we had this high here, we had this low here, we had this high here, we had this low here, we had this high here, we had this low here, this high, and then we had this low. So this is the internal structure on the 4-hour time frame. I'm going to change that to blue, just not to confuse ourselves. So the blue there is the internal structure on the 4-hour time frame. Now, the levels of internal structure on the 4-hour time frame that are aligned with the levels that we have on the daily time frame are the only levels we want to be looking at. Okay, Inside here, you can see internal structure levels, which is what I marked out here. Now, I would have really loved to see the market pull back up to this level, react from here for that sell to take place. But the reason why that sell was valid was because we had something called liquidity. Again, for the people who have experience, you know what liquidity is. So we had liquidity in this market from here all the way here like that. Some people draw their liquidity like that. Other people draw their liquidity kind of like this. So that's liquidity too as well. So we're expecting the market to grab all this liquidity, react from this, and then drop, right? Now we can start to refine this further to the 1 hour time frame. Okay. Now on the 1 hour time frame, you can see there's nothing on the 1 hour time frame that is aligned with, the higher time frames. But what I did there is to add a Fibonacci, okay, using the internal structure on the 1 hour time frame. So my Fibonacci was from this level here to that level there. Now I know this is looking a little bit messy. Please, please, please bear with me. For the people who have experience, I know you guys are not going to have any problem with understanding this, but for the beginners, it might look a little bit too much. Okay. But again, this is a glimpse of what you guys are going to learn when we get to technical analysis. So if you're going to watch this as a beginner, just don't feel like a dummy. Just be patient. You understand everything. Okay. So yeah, so I had to put my Fibonacci from this to this and just to get this. So I was waiting for this, but the market had other plans, right? The market had other plans. So according to some of the concepts that we use, the market builds up liquidity during the Asian session, and once it's the London market open, the market can sweep the Asian high liquidity and just start to drop from there, even without reacting from a supply level. Just like you can see here, the market never reacted from this supply level. But for the fact that it has grabbed all of this liquidity here, okay, it has grabbed all of this liquidity, right? So all of this here is liquidity. Okay, the market grabbed all of that liquidity. And again, when the market opened, it already built liquidity during the Asian session. So this is the Asian high, and that's the Asian low. So what happened as soon as the market opened, it swept the Asian high and then gave us a reversal confirmation. Again, now what's our reversal confirmation? Very, very simple pattern. We want to see an uptrend as such, and then we want to see a break of this so we can now start selling from this area here all the way to the downside. Okay, now if I show you the internal structure of the leg we have here, okay, just looking at this, we have something like so we had a low here, we had this low, we had this high, we had this low. Remember, we were expecting the market to pull back all the way. It's not like, the market is buying, let's start buying. No. Okay, all of these buys coming into the market, they are things that we expected from the market. Okay, now the market is actually doing what we expect. All we need to do is wait until we can now have an opportunity for us to take our trade, right? So we had this here, boom. We had this high here. Okay, we had this high here. Now pay attention to this low to that high, right? If I zoom into the 30 minutes time frame, from that low to that high, you can start to see something that looks like, again, internal market structure, right? So what happened there on the internal market structure was from this lows here, the market broke this high here and gave us this as a high, gave us this as a low, and gave us this as a high. And this is where that low here was broken, this here. So that's where we had the confirmation after, sweeping all of this liquidity, right? After taking out all of this liquidity, right? And all of the Asian liquidity too as well, we had a reversal pattern. And then that was the go ahead to take that trade. That was the go ahead to take that trade. So if you look at this, of course, obviously, again, we had some type of internal market structure before that low was taken out. We had high here. We had some kind of low here. We had a high here before we had this low. So once we confirm that this low here has been broken, you set a limit, the market pulled back, trigger the limits, and then boom, all the way to the downside. Now look again what happened when the market took out this low here. It pulled back up again to this level, which has now become a breaker level for a continuation to the downside. So obviously, I'm expecting this to still continue to the downside. I'm expecting this to still continue to the downside, just going back to the higher time frame and looking at what we have on the higher time frame. I'm expecting that to still continue to the downside, or it's also possible that now, following this, we now have this as a break of structure. We can have the market bounce from here, pull back all the way to this zone before we sell off, but I'm still rooting for this to still fall to the downside. So basically, that is the trade breakdown. Remember, I posted the trade earlier on the group. I just wanted to give you guys a very, very detailed trade breakdown. Let me just go back to the 15 minutes so you can see exactly what the trade it's looking like there on the 15 minutes. I know there's a lot of markup on the charts right now, but again, like I said, for the people who are total beginners, it might be a little bit overwhelming, confusing, maybe difficult, but with time and experience, you'll be able to learn and understand all of these concepts, and you'll be able to apply them on the charts as long as you spend time with the charts. Okay, put in the time to understand these things, right? Put in the time on the charts to understand these things. Play around with the tools, play around with market structure, play around with all of the concepts individually, the concepts of trend, try and understand them individually before you try to put them together. Okay. Yeah, I just wanted to give you guys a detailed trade breakdown because obviously it's been a while. And again, if you watch the trade breakdown I just gave you, check some of my older videos from like 2022, 2021. You can see that it's the exact same thing I've been doing for the past 2-3 years. My strategy has not really changed. It has not changed at all. Okay. It has not changed at all. A lot of people have changed their strategies to say, well, the market has changed. Things are different now. My strategy is no longer working anymore. But trust me, my strategy is going to work from now until time immemorial, right? It's going to work from now till forever. I don't really care, how your strategy works, but my strategy is based on logic, is based on market structure, is based on the data the market is showing to me. So I know it's certainly going to work for time immemorial, right? You can backtest the market all the way back to 1987. The market has been moving the exact same way. Okay, so with all of that, that's the trade breakdown. I really hope you guys enjoyed this video, and I'll see you guys in the next one, man. Peace, gang.